Hey everyone, welcome back to the channel where we break down the latest trends in the stock market and help you stay ahead of the curve. Today is December 18, 2024, and we're diving into how the US markets performed today and what traders and investors should watch for the next workday. Make sure you stick around till the end, as we'll cover some key data points and trends that could set the tone for the rest of the week. Let's start with a quick overview of today's performance. The Dow Jones Industrial Average closed up 0.6%, adding around 200 points, fueled by strong gains in the energy and financial sectors. Meanwhile, the S&P 500 advanced 0.4%, closing just shy of a new yearly high. The Nasdaq Composite, however, underperformed, slipping 0.3% as tech stocks faced some selling pressure. Big names like Apple and Nvidia saw some pullbacks today, likely due to profit-taking after their recent rallies. Apple dipped 1.1%, while Nvidia slid by 2.5%, despite positive updates on their AI advancements. On the flip side, energy stocks were the big winners. Chevron and ExxonMobil both gained over 3% after crude oil prices jumped 2% on reports of lower-than-expected inventories. Banking stocks like JPMorgan Chase and Goldman Sachs also climbed, benefiting from rising bond yields. Today's market movements were heavily influenced by fresh economic data. The Federal Reserve released its final policy statement of the year, holding interest rates steady at 5.5%. What's interesting is the Fed's updated dot plot, which hints at a potential rate cut in the second half of 2025. This gave investors a sense of optimism, particularly in rate-sensitive sectors like real estate and utilities. Retail sales for November came in stronger than expected, up 0.7%, signaling robust consumer spending as we head into the holidays. The housing market continues to face pressure, with housing starts down 2% month-over-month. High mortgage rates are clearly weighing on new construction. Now let's talk about what's on the horizon. With December 19th being the last trading day before the weekend, here's what you need to keep an eye on. Friday marks the expiration of stock options, index options, stock futures, and index futures. This could lead to heightened volatility, especially in the final hour of trading, often called the quad witching hour. FedEx is set to report earnings after the bell tomorrow. Analysts expect strong results, driven by holiday shipping demand. If FedEx beats expectations, it could lift the broader transportation sector. We've been noticing a rotation from growth stocks into value names. Watch for continued strength in defensive sectors like healthcare and consumer staples, especially if market uncertainty increases. The Labor Department will release weekly jobless claims data. If claims come in lower than expected, it could signal continued strength in the job market, potentially boosting investor sentiment. Technically speaking, the S&P 500 is flirting with a major resistance level at 4,800. If we see a breakout above this level tomorrow, it could pave the way for a rally into year-end. On the downside, keep an eye on support around 4,700. A break below that could signal a short-term pullback. The Nasdaq is nearing its 200-day moving average. A failure to hold above this could lead to more selling pressure in tech. The Dow, on the other hand, has been steadily climbing and could test 36,500 if bullish momentum continues. To wrap things up, today's market action showed resilience, but tomorrow's session could be a wild card with all the catalysts on deck. Whether you're a day trader or a long-term investor, staying informed and keeping an eye on those key levels will be crucial. If you found this breakdown helpful, don't forget to hit the like button and subscribe for daily updates. Also, let me know in the comments which sectors you're focusing on as we approach the end of the year. Thanks for watching, and I'll see you in the next one.